Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities here with your Cabot Weekly Review. It is Friday, November 15th at about 12:45 Eastern Time. And wow, there has been a lot going on since the election. We're going to kick things off here talking about small caps. We have a chart of the S&P 600 small cap index here. And as you can see, right after the election the next day, small caps broke out. They were up 6%. Again, this is the S&P 600. And that's notable for a couple of reasons. First of all, obviously the magnitude of the move there. And then, of course, it also put the index above its high for 2024, which was struck back on July 31. And maybe even more significantly, if we go back on the weekly chart, this goes back to 2019, right here, November of 2021, so almost 3 years ago, was when the S&P 600 small cap index hit its all-time high, and we blasted through that in the day after the election. So if we can hold on to that level, pretty compelling case for small caps to do very well on a technical perspective. Of course, there's a lot of fundamental stuff going on as well, which we'll get into. But just that breakout, it's something that I have been looking for a while, and we finally got it. So I'm certainly hoping that small caps can hold on to that, call it 1470, 1480 level, and have a new base created there. So let's move a little bit deeper. So I did a little work this week on small cap versus large cap by sector. I just want to throw that chart up because it kind of helps to speak to why small caps jumped so much. So here we have small versus large by sector. Green is small caps, blue is large caps. We have the index all the way over here to the right. This is since November 5th through this morning. And really what I want to call out here is the strength in small cap utilities, materials, industrials, all three of those sectors outperforming. And then the also significant move in energy and financials. In those two sectors, small caps slightly trailing large, but all of these sectors carry really significant weights in the small cap index, and so that's part of why the index has jumped so much and more than large caps. Now let's focus in here on financials for a second and go back to the chart. I want to run through just a couple of financial charts, both large and small cap, because it kind of shows the story of how crazy it has been since the election to follow along with some of these moves in the market. So large cap financial here, JP Morgan Chase, we all know this, but JPM was up 11.5% the day after the election. That is a monster move from that stock, but not when you compare it to SEZL. SEZL, a company with a $2 billion market cap right now. A couple days after the election, reported earnings, and it was up, 73% the next day. We also had Morgan Stanley, again, we all know this company, up 11.6% after the election. Compare that to Dave, which rallied after the election and then shot 44% higher after earnings. It's a $1 billion market cap company now. And also Moneyline, ML ticker symbol, and it's under 900 million market cap. So certainly not recommending you go into Moneyline or Dave or SEZL, but again, what I'm kind of pointing out here is just how crazy some of the action has been under the surface of some of these sectors. And for those of us that have been watching this and trying to make sense out of some of these moves, it has been both exciting and interesting and challenging all at once. So let's continue to move on here. Here we have a chart of the XLF. This is, of course, the large cap financial sector ETF. And I think that this is a pretty compelling setup. Trump administration should be generally friendly toward the financial sector. That's why, of course, all these stocks have done so well. And this is one of the ways to play it. You could also go with the small cap sector ETF, which here is the PSCF. A little bit thinly traded, but that would be the way to play it if you just wanted to go with small caps. Now, let's just step back for a second and look at the bull case for why stocks have gone bonkers since the election, other than maybe over the last 2 or 3 days. Okay, so obviously there are some challenges and some potential negatives, but again, let's just put on our bull case scenario hats. And what we start with is that the election is over and we had a clear winner, right? There was some concern that it would be contested. That didn't happen. The Trump administration is almost certainly going to be pro-business, work to cut regulations. That's part of why the financials are doing so well, as well as taxes. The corporate tax rate could go from 21% to 15%. That's a very stock market friendly thing to happen. Geopolitical risks, maybe they're going to be lower under Trump. You could argue that they won't, but if we look at the price of gold, this is the GLD, it has come down since the election, somewhat signaling that the market sees lower geopolitical risks. We also have this appointment potentially of Elon Musk to slow or slash government spending, and whether or not you like him or think that he can get the job done, there is potential there. And if he is successful, then perhaps these concerns about a debt crisis for the U.S. government will prove to be overblown. Now the Fed, they cut rates again last week. Powell didn't sound overly hawkish during that press conference, although this week maybe a little bit more so. And as a result, expectations for future cuts have come down. We'll talk about that a little bit more in a second. And then lastly, the market, of course, reacting favorably to expectations of faster revenue and earnings growth. Those are going up on expectations of Trump's business-friendly agenda. I think if we do get that corporate tax rate, expectations will go up even more. Analysts aren't going to bake in too much upside until policies are actually passed. So, of course, we can't always just think about the bull case scenario and forget about the risks, as fun as that is. And there are plenty of risks. So, back to the Fed, right? The Fed may not cut rates as much as has been expected. Certainly not in the short term. The economy seems to be strong. Job market is good. Cutting rates too much, too fast, definitely could risk inflation coming back. Current market odds suggest that there is only a 60% probability of a cut in December, and then after that it gets much more murky. So I think it's reasonable to dial back expectations of Fed rate cuts. If we look at the 10-year yield here, I mean, we were not expecting this to happen, right? 10-year yields have been rising. There was a little reprieve here after the election, but bounced right back up. So that is not great. I mean, at this level right here, 4.43 is where we're at. Maybe yellow flags, not quite red flag, but if the 10-year goes too much higher, then that could cause more indigestion for the market. I think it's one of the reasons that the market is down a little bit today. What else? Okay, tariffs, definitely some uncertainty there, especially for companies that are doing a lot of manufacturing in China. Political and regulatory disruption leads to uncertainty. What's going to happen with big tech? Or, is the Trump administration going to go after big tech? We don't really know yet, but potential challenges there. There also could be targeted market disruption toward companies that are not aligned with Trump and Musk and other Trump allies. Take a company like Rivian, for instance. What's the outlook there versus a company like Tesla? So that is something to consider when you're looking through individual stocks. And then again, like just big investor sentiment perspective, investors got very, very bullish in the days after the election, maybe too much, and we're seeing a little bit of a pullback right now, possibly as a result of too much bullishness. So kind of to sum things up, it has been a wild ride since the election. I think that, as we progress, we are going to be in a more business-friendly environment. I think that's going to be good for small cap stocks. I think it's going to be good for stocks in general. But again, I've been focused mostly on small caps lately and have been looking for them to break out and move higher because, again, if we look back to 2021, it has been since then 3 years that small caps haven't made any, net upside progress. So I think there's a pretty compelling case that in another 6 months, 12 months, 18 months, small caps are significantly higher than they are right now. In terms of what are attractive buy opportunities, at this particular moment, Pretty challenging to want to stick your neck out right now because, like I was showing you with the charts with Moneyline and Dave, there's some things have just been moving so much that the expiration date for a stock tip on a weekly video is probably about an hour or two. I think that if we go into our standard playbook for playing broad-based moves in any group, of course that points towards ETFs. I think the IJR for small caps, that's the S&P 600 ETF from iShares, is a great way to go. Also the VBK, if you wanted to have a little bit more exposure to the growth end of the spectrum, VBK is an offering from Vanguard. Those would be the two there. I think the XLF, like I mentioned previously, is a good way to go for financial exposure. Let's get into a couple of individual stocks. We have 3 here. So if you wanted, to be much more aggressive, I think something like CORZ Scientific looks interesting. It's a newer company to the public market. They reported earnings on the day of the election and actually had a pretty good response, as you can see here. 4.3 billion market cap company. What do? They operate a network of data centers for Bitcoin mining and high performance computing. So of course the Trump administration is pretty friendly toward that. Digital infrastructure play, that's CORZ Scientific, ticker symbol is CORZ. Another name that I think is interesting is related to Shopify in a way. Here's the ticker, or here's the chart for Shop, SHOP, which had a monster reaction to its earnings report. One company that's kind of a play on that move on Shopify is KVYO. I always get this one wrong, but I can pronounce the ticker symbol. It's KVYO. They were down on earnings. It's a marketing tech company. A lot of work that it does is with Shopify, helping people sell on Shopify. So I think taking advantage of a dip after earnings in a company that has good fundamentals and a good growth trajectory, but has sold off on results that just didn't blow the market away. I think that KVYO could be an interesting opportunity right here. And lastly, medical devices. So here's the IHI, relatively calm this week compared to a lot of other sectors or subsectors. One of the ways to play a longer term thing here with medical devices is Artivion. Ticker symbol is AORT, market cap of 1.1 billion. And they have a number of devices that should come to market, FDA approvals later in 2025 and 2026, which could juice the growth rate, but they're still growing right now at about 10%, maybe lower double-digit growth rate through this year and into next year. And then a couple of new products coming to market. Something like this isn't really that well known. There are growth opportunities under the surface that could materialize a little bit sooner. They have a product that is going to be released in China, which could add a little bit of growth. But again, I kind of look at a company like this as it hasn't gone bonkers. Stock looks fairly reasonable right now. It's at support, and we have a couple of new products that are going to help keep growth alive, maybe even help accelerate growth. Certainly should help accelerate margin growth over the next 2 years. So that is Artivion. All right, guys, that is it for this week. Coming up next week, we are offering a sale off of Cabot Small Cap Confidential, which we rarely do, but I just wanted to plug that. We're going to have a sale going out on Monday and Tuesday of next week, and if you wanted to take advantage of that, you could jump into my service for 65% off the retail price and get all of the research that I put out on small caps across all sectors that are looking interesting right now. Right now we're doing quite a bit with technology, some medical technology, some industrial stuff, some U.S. infrastructure plays. So a lot of interesting things going on If that is of interest, you can grab a trial subscription by going to www.cabotwealth.com/Tyler and get more details there. I would love to have you on board, and of course you'll get instant access to my email address, and we can keep in touch on what's going on out there and what interests you in the small cap world. All right, I hope you have a nice weekend, and we will be back in touch next week. Take care.